welcome to the Dollar Auction Podcast, episode 1 with the new name, formerly known as the Hardcore Finance Podcast. So, Dollar Auction, Shimon, how are you?
I'm doing great. I'm not participating in any dollar auctions this week, which makes me feel fantastic.
Yeah, we went over why we're calling it a dollar auction, right?
Yes, we did. It's a terrible thing, guys. Never participate in a dollar auction.
Hey, this is a genius. You buy $1 for $100 and lose 99. Beautiful. So let's jump in. We have a lot to talk about today. We have a great guest, David Richter, coming up after we do the news and analysis of the markets. And he's going to talk about real estate with us. But before we welcome David to the show, let's just talk about the price action and the news. So what do you have for us, Shimon?
Well, I mean, there's a lot of regulation coming our way. I saw that Kraken, one of the major crypto exchanges, got sued by the SEC for the earn product that they offered. The chairman of the board, Jesse Powell, snarkily basically answered and said, "Oh, if I would just have told people, how their funds are being used, I wouldn't have to pay this fine." But we just basically see that because of the FTX drama, regulators getting more and more, scrutinizing, if you can use that term.
Scrutinizing is a good term.
Scrutinizing is a great term. But no, I think that overall it will be good for the industry because I heard a Michael Saylor talk and he said, look, regardless of what the SEC decides, it will be better than being in limbo. So we can put a link to that clip, but I thought that's a very good point, which is, they're not going to ban Bitcoin in the US. We've discussed this on the show many times before, why we don't think that they would ban Bitcoin. So if they don't ban Bitcoin, he went through several scenarios of saying that you can have currencies, which are stable coins, and this is how you apply for a currency license. You can have securities, and this is how you register a security. So any guidance that they give will put the market in a better place. According to him, a lot of institutional money is just sitting on the sidelines, just waiting for regulation.
Yeah, so I think that's right. And look, I'm a big digital assets, crypto, Bitcoin, specifically bull crypto assets as well. The fact that Gensler says, just come to the SEC and register is a bit bullshit because it's hard to register. People have tried, and there are many Twitter threads about they're saying, "Hey, we're trying," but you're just saying no. So it's all nice that you're in front of Elizabeth Warren and whatever you're going out and saying these things, but then coming back and it's hard to do. However, in some of the lawsuits that we've seen, he has a point. If you're money managing, if you're offering a different yield than it's promised in DeFi protocols, it could technically be argued as a money market fund. Same thing when they went after Paxos and Binance US Dollar. The point, from what I understand, and we'll see when the case actually comes out, 2 points. One is that it wasn't fully reserved, though it's one. And two, that once they Paxos issued BUSD, Binance wrapped it and put it onto other bridges to other chains. Then that becomes potentially, according to the regulators, a security. So it's not like a clean cut stable coin. They're not going after Circle and USDC, right? But then again, Circle was audited by Deloitte. BNY Mellon is the custodian, BlackRock as an investor. I mean, these are serious people with serious backers behind them. They're not messing around. So while we can yell at Gensler about some of the things that he's putting out there, and there does seem to be a coordinated, or at least a, conspicuously coincidental, it's a nice phrase, attack on crypto from a lot of regulators, the OCC, Office of the Comptroller of Currency, FDIC.
Why do you say conspicuously? It's not conspicuous at all. I would be surprised if they didn't do it.
Conspicuously, yeah.
Conspicuously coincidental.
Inconspicuously coincidental. But yeah, they're coming after crypto. And look, you're right. You made the statement many times before Saylor. It's Shimon before Saylor. That's what I say. Who you said, hey, when there's when there's regulation, the market likes certainty more than uncertainty. So even if the certainty is bad, at least there's certainty, and at least there's more information with which the market can, digest, which the market can digest, and with which it can proceed. And so, it's going to be tough, but at the end of the day, I'm not worried for Bitcoin at all. I'm not really worried for Ethereum. Some of the other guys might be harder. The long tail of crypto assets, it's going to be tough. It's going to be tough.
Yeah, I agree. But, in other news, just the economy overall seems to be picking up a little bit. And when I say the economy, I mean the stock market, because we know that the stock market prices in, recessions way ahead of time. And then, it usually bottoms, 9 months to 12 months before the actual economy bottoms. But it's interesting. So, Bitcoin price is back up to good levels. The stock market is kind of recovering back to the trend line. So I wanted to ask you, Alex, what do you think in terms of the kind of next 6 months? Are we going to go up? Are we going to go sideways?
To the moon! It's gonna be choppy, I think. Look, the nice part is that there are a lot of bad news that came out against crypto regulation. So when Bitcoin isn't moving, not only is it not moving, it's actually increasing, which tells me that only the hodlers are left. Dan Moorhead, who's the CEO of Pantera Capital, one of the major capital VC shops in the space, came out and said, "Look, the bear market is over. We're starting a new bull market." And they, according to them, it's we might be. It doesn't mean we're going to go up right away, up and to the right. And it could be choppy for some time, but at least the worst has kind of passed. And again, we can see that from the price action, right? Like sellers aren't really selling. I think the other bullish thing that came out was yesterday overnight. The Celsius, it's like the creditor committee accepted the plan from Celsius. Now the story there is that Celsius, one of the first firms to go under. They were Celsius, one of the first firms to go under. The 7 months they've been going on and on about a plan of what to do with the plan to basically go through bankruptcy. And there was a period of time they were supposed to present a plan by the 15th, which is today. Nothing was being presented. They were bleeding lawyers' money, and basically a bunch of states sued them and said, if you don't present a plan, we're just going to liquidate the crypto and give people the money back. And that would be bad because they hold a lot of Bitcoin, they hold a lot of ETH. It would have been a just market sell of a whole bunch of crypto, which is no longer going to be the case. They accepted, it's called Neil Wolf or something. It's a new company that was founded by 4 or 5 folks that ran some people ran marathons, mining operations. And actually, so they're going to tokenize the new company's equity into tokens on the Provenance blockchain, which is a new blockchain. The token is called Hash. OKCoin actually had them listed until we didn't. There's no more to that story, but we should keep it off this podcast. But I'm a fan. They're very good people, and so the people sit on the board, a former COO of Coinbase. So they're solid chain, and interesting to see they're going to tokenize equity. So that's bullish. I'm pretty bullish on it. I think we really have got the worst. The worst is behind us.
Yeah,
what do you think?
I agree. I mostly think that this is kind of a repeat of 2018. Back then also, the Fed was raising interest rates. I just think people underestimate the productivity gains. We spoke about ChatGPT, but even what Putin tried to do to Europe, he completely underestimated how quickly they can reorganize themselves in terms of energy. And so I just think that when there's panic, markets fall and everything. But I think people really underestimate the growth that can come. And I'm pretty happy about the Republicans. I'm not going to lie. I've been interacting with several people on the, blockchain caucus, but also I just saw Nikki Haley, who's running for president. I don't know if she'll make it, but she literally said now, the solution for climate change is sequestering carbon, which is amazing because I've never heard someone running for president. I've heard this in academic circles. I think OpenAI or Y Combinator had a huge grant to figure out can we sequester carbon? But like all this talk about like nuclear is a cheap source of energy and like sequestering carbon is a solution for climate change. So I'm just like optimistic about humanity in general these days. Clearly, it's really hard what's still going on in the war in Ukraine, but I mean, it's just one conflict. You know, when you look at global the global economy, you know, I'm pretty optimistic these days.
I have another piece of news, and I know you want to talk about ChatGPT, but I do want to show you something. And while I'm showing it, speaking of conflict and, you know, global conflict, the U.S. shot down 1 balloon and 3 UFOs recently, which, you know, some people are saying, NORAD general saying, oh, we cannot rule out that it isn't aliens. The Department of Defense is like, no, it definitely isn't aliens. They still haven't found the wreckage. But Fox News, in their infinite wisdom, recently did a poll, and hopefully you can see this. So the greatest threat to world peace, it's like Xi Jinping, 7%, Putin, 8%, Ali Khamenei, 8%, Kim Jong-un, 17%. The red balloon, baby, takes the cake with 41%.
But what is that red balloon? I thought the balloons were white.
They are white, but this is I mean, they're making fun of this
I'm
whole
just
thing.
trying to bust your
Bust
idea.
my chops.
No, but so I just like we spoke about this a couple of days ago, and I am completely bought into my beautiful wife Kate's narrative, which is they're just using it to distract us from something else, and it's like it's happened before. That's the one thing when you and I spoke about it. We're like, oh my God, 4 objects and stuff like that. We literally looked it up many times in the past. They've shot down stuff from the sky. They said we can't rule the fact that it's a UFO. So I'm just like refusing to give any of my mental energy to blue, red or white or blue or any color.
You know who can give this balloon some more mental energy, which is free? ChatGPT.
Yeah, well, a couple of interesting things. First of all, I heard on the All In podcast that basically the technology is just getting started because they trained it on just like a corpus of words, right? But now, as more and more people use it, that's how the step function will happen. So what we're currently seeing is not even close to even scratching the surface because, like, as you and I know, artificial intelligence, there's no magic about it. It's just like going over data and finding more and more connections between the data. So for example, they mentioned that there's like an Excel plugin that's based on ChatGPT. You can open one of these like huge sheets that have like 12 tabs.
A spreadsheet?
A spreadsheet, yeah. And basically this plugin does something that is actually hard to do, which is like it tells you, this is what the model is about. These are the inputs. These are the outputs. These are the sensitivity conditions, like in plain language. And so you and I have built many of these models. You know, it's trivial for the person who built the model to explain this to you. But if you just get it by email, you'll probably need a call with the person who built the model, you know, and then they would have to explain these things for you. That's it. Saved you the call. So it's pretty amazing that it actually can make people much more productive. There was another demo. You can post a link to it. It's just like literally people took a data set and they just said, okay, can you please create an HTML file that visualizes this data set and also tell us what are the main insights? And it's amazing. It's like suddenly a web page that you can publish that has like beautiful graphs. And you don't like think of how much time. I mean, I've spent so much time in my life just fine tuning the the axes, the colors, just like to build the graph in the right way. Like I have it in my mind, but just to put it, it's so much work. So all of that I think is not priced in yet. I really don't think, especially because it launched in really bad economic conditions with the war, with the inflation, with post-COVID, all of these things. Just think of what it will do for like drug development. Like there's just so many things. Even like we have a friend whose whole job, he works for a consulting company. His whole job is to take reports about traffic accidents in Maryland and just feed them into the database of the investigators or whatever. So he doesn't feed it. He basically builds the software that like takes the reports written. all of that is going away. And then those people...
Yeah, it's like ChatGPT, pull in the data, done.
Yeah, exactly. It's like, here's some PDFs, right? Just feed them into the system. It can totally do that.
Yeah. No, it's huge. I was thinking of our previous life as consultants. All the changing of the colors and the charts or whatever, all that we instead of 80 hours a week, we would now work 20 hours a week. 20 hours of thinking, 60 hours of editing colors. That's McKinsey for you.
We would still be working 80 hours per week. They would just give us 5 projects instead of 1 project.
Actually, but that's true. You know, we joke, but this is the productivity increase. That's the whole point. It does it all for you. You just have to think. And instead of just doing stupid stuff of changing colors, you're thinking. Anyway, lots of good stuff. We should do a whole episode on ChatGPT, but I know our guest is about to come on the show. So let's do a pause here, and we're going to welcome David in a second, and we're going to have a good interview about real estate. And next one, ChatGPT.
Sounds good.
All right. So our guest today is David Richter from the Profit First Real Estate Podcast and Fractional CFO. So David talks a lot to his audience about Main Street audience, about being intentional with profits, thinking about real estate and other investments, thinking about being profit first and profit driven versus call it, growing through hyperscale. And then there's this whole interesting part of this whole fractional CFO aspect to it, which I would love to learn a little bit more about. So David, welcome to the show. Tell us a little bit about yourself.
Thank you. I appreciate you having me on. I know this is your audience, and when I had these guys on my podcast, they delivered a ton of value. So you guys are lucky to get to listen to them if you're listening to this podcast right now. If they deliver even more than what they already did on mine, this is incredible stuff. But as far as my background goes, I was in real estate for the last 10 years, have been a part of about 850 deals, which means in the wholesaling houses, so buying it, getting it under contract, selling it, or flipping like you see on the TV shows, which it's not all like the TV shows, rental investing, a lot of the things with the single family world. So that's where I've been playing in for the last 10 years, and then saw a huge need on that side where a lot of people are going and getting the deals under contract, making the money, then have no idea where it goes. Where the heck did all my money go? Like I just made $50,000 on this property. Where did it all go? And it's like they have no idea. It's like through the payroll and through the marketing and just all the expenses that keep piling up. And then they're buying new properties or they're buying this or that, the other thing, and they're wondering where their money's going. So that's where the fractional CFO business came into play, because even when we were doing 25 deals a month at one point, we were like spending 26 deals worth out the door. So it's like I saw this firsthand as well. So just wanted to help the community, especially that Main Street community, get out of the rat race of just, especially if they've already done the hard work and started their own business, like make it feel like it's worth it as well too. So that's really what we're trying to accomplish with the fractional CFO business and give people hope on that side. So that's just a little bit about me and very quick overview of my background.
That's awesome.
For the last
so we've had some real estate guests on our show previously, but I would love to hear, we haven't spoken about the topic too much in the last year, and things have really changed over the last year. So what would you say is the current environment of real estate investing, and what do you think kind of is maybe a big mistake that many people make when they approach real estate as an investment rather than just like buying a house to live in?
Sure. So I get to go to a lot of different events, real estate events. So I get to hear from kind of the whole market, because real estate is very local, because, some markets are just wildly different than others. Go figure, right? The Midwest is a little bit different than, Las Vegas and Los Angeles and some of those bigger cities out there. So that's where I get to see a lot of those different types of markets. And in some markets, in all markets, I would say in November, December, 2022, we're feeling down. They were feeling a recession, the real estate world in general. I think a lot of people had slowed down. This was different than the typical end of the year. It's Christmas time, and it's holiday, this, that, the other thing, everyone's shutting off. A lot of people had flips that would have sold for like in 2 days, we're sitting on the market, stayed on the market through the end of December, and from November. So a lot of people, and their leads dried up too. Because if you're in the small business world, that's how you eat, is like making sure that leads keep coming in the door, that you're still able to get properties under contract, and that a lot of that had dried up. And a lot of it was the sellers of the properties hadn't caught up to where the market really was. Where a real estate investor, you know if the market changes almost immediately, especially if you're very into it and this is what you're doing full time. Like, you know that the interest rates going up is also going to slow people down from buying the house or selling their house. And, now the values are going to start coming down. Well, that doesn't translate. The sellers are usually 6 to 12 months behind. And so, like in November, the sellers were thinking they could still get the prices back from, January, February, March, or even 2021 prices. Like, hey, that one sold for like, 500,000 over there. Well, and their house is only worth 400,000 now, like because of where interest rates are and the value of their house. So the sellers hadn't caught up to the reality of what their properties were actually worth, and a lot of these that they buy are fixer uppers. So it's like, the seller doesn't know how to equate that. So I think there was a big catch up game in the quarter 3 and quarter 4 of 2022. And I just went to a couple events in the last month, and a lot of people are seeing that the sellers are finally catching up, and that they're understanding their house isn't worth as much now that the interest rates are, increasing, and that in these different areas that they're not selling for as much, they're able to actually go in there and say, okay, this is what the house is worth. And the sellers are more agreeable to that now. And now they're getting, the real estate market, as far as the investing market goes, it's kind of like overlapping now, where they're in agreement. So I see that in a couple different markets. There's also some very hot markets still, where I just went to an event last month, and there was a couple people in Texas, like Dallas area, where they were putting a property on the market, and then it's gone the next day. So there's still some areas of the country where if you have a very desirable house, that it's still going to fly off the shelf as well too. So that's just some of the things that I've heard of the rumblings, being able to have access to people of all from Florida all the way up into Washington State. It's like we either work with people in those areas, or I get to be in groups that encompass a lot of the real estate investing side. So that's been interesting. You said that, I know that was a long answer for number 1, but real estate is very local. So it's like being able to cover the whole country there in like 2 minutes. Then the other one was mistakes real estate investors making. Oh man, I can park here for a while. So you're going to have to cut me off at some point, probably. Because not that they make a lot of mistakes, but the ones that they make can kill them, can literally take them down. When especially on the financial side, because number 1, a lot of people just don't look at the financial side at all in a small business. They're like, because at the beginning you have to have revenue. You have to have revenue to drive the business. Like, they're literally killing to eat at that point. And so they have to drive revenue, but they're not looking at the financial side. And then whenever they do, it's scary, because it's not revenue generating. It's not something they're usually interested in. A lot of people that are just they start a business are more sales oriented than they are financial in numbers. So it's like, oh, here's my shoebox full of receipts, accountant, can you just take care of this at the end of the year? So it's like just abdicating and walking away from the numbers, probably one of the biggest things, because then you don't know where you are. I have lots of mistakes. I'll just touch on 2 more real quick. The other one that they make is that they don't build their business around them. They don't build the business around who they are, their situation, what is their family unit, what do they need to make on a monthly basis. They are always going off of the shiny object syndrome of, oh, they're doing $1 million, I need to be doing $1 million. Or they're doing 10 deals a month, I need to be doing 10 deals a month. It's always looking at what someone else is doing versus, this is what I need, this is what I want to build my business around, this is how much we need to bring in, this is the team that I want, being very intentional. So making sure that they're being very intentional with their life and their business. Third thing that I would say too is they have one big bank account where all the money goes in, all the money goes out, and that is literally how most small Main Street entrepreneurs handle their finances. They have one big bank account, all the money goes in and out of, and they're like, where the heck is all my money? Because they don't want to dive into a financial software, which I totally understand. And then you've also got the other side of like, but they want to be able to know, is this money mine? Am I able to spend it on this marketing campaign? Am I able to spend it on a new hire? Not having that clarity. So that's literally how they're running the business, that one bank account. And then they have no idea what's going on. They have no clarity around every dollar in their business. So those are some of the mistakes I see as well. So hopefully that covered both questions for you from the real estate market and then some of the mistakes I see in the real estate world.
Yeah, I love this. You talked a little bit about, mixing money and commingling it. What's underneath all that is this aspect of I'm uncomfortable with something, so I'm going to ignore it or
Yes.
look at it later. And all of us have it, right? Like, look, all of it, no matter what, in the highest professional in any sport or any area of expertise has this. It's not pleasant. It's easier to default to the things you're good at than working on the things that you're not. So I know on your show, we talked a lot about intentionality. Specifically for this, how do you get people to, it's probably less real estate and more psychology, by the way, but how do you get people to overcome this aspect of, I don't want to look at it because it's kind of big and scary or it's not my expertise, so I'll just do it later.
So another thing that doesn't help, just I would say in small business in general, but especially the real estate world, most people have horrible interactions with bookkeepers and CPAs and accountants. Either they're talking down to them or talking over their head. Like either they know I'm smarter than you and you're going to go on wait until I'm ready, and then they're going to like have those interactions, or the bookkeeper is just like, okay, let me do your books. I did it the best I know how, but I didn't ask you for any input, and here it is. And they have no idea if it's a mess or not. It's like I've seen the wide gamut there. So that's why most people usually are also scared of the finance, because they also don't know how to hold those people accountable. They don't know, like, is this normal? Like for my accountant to do this, or like the bookkeeping, I have no idea. Yeah, they put the stuff in there. I have no idea if it's in the right place. So that's where, honestly, why I even created the company that I have. Simple CFO, like a fractional CFO, to be a financial leader on the team, to kind of take that worry and stress off of the owner's plate and, off of their shoulders, because a lot of people don't know. They don't know what to say or what to ask the bookkeeper, or what should I even be looking at to grow my business? Like, should I look, and how do I do a financial model, or how do I project? How do I do cash projections in my business? A lot of people have never, it's just on the personal finance side. You can listen. A lot of people follow the big gurus, right? Dave Ramsey, Susie Orman, like a lot of the people that tout their expertise, a lot of people also haven't read any of their books, haven't gone down that path, because that's not Main Street knowledge in the schools. That's not taught to us at an early age anywhere. It's just basic financial literacy. So if you get none of that, okay, let's just say you've avoided that your whole life, you get into the business world, and then you're magically supposed to be able to run the finances better than your home finances, which are probably a mess at that point. It's like, that's where a lot of people, they don't feel comfortable and confident with money at home. And then they start a business, and then they're just like, if I make enough, if I do enough deals, or if I close enough sales, if I have enough revenue coming in, it'll just solve everything. More money will solve my problems. Where in the past, they've gotten raises at jobs or whatever, and more money meant more debt, or more money meant more problems to them. And it's like, well, that's not going to happen if you're making $1 million a year, but you're spending 1.1, because we never got financial literacy under control and how to actually manage the dollars coming into the business. That's honestly why I started Simple CFO, to be kind of that go-between, and to be able to say, I want you to have a bookkeeper, I want you to have a CPA, but you need to talk to someone about how do we have financial literacy, how do we set up the just financial foundation of our business so we don't go out of business and we know where every dollar is going. So that's kind of one of the pieces. The other piece is that I use inside of our business is profit first, and like what we talk about on our show, which is a cash flow system for entrepreneurs that go into the real estate world, or any type of, honestly, that it works. The principles work for any type of business, but it's literally giving every dollar a name. I know we talked about intentionality a lot when you came on our show, and we've talked about it here too, but it's being very intentional with every dollar that comes in and giving every dollar a name in your business. And so just like Dave Ramsey has his envelope method, for your personal finances, this is kind of like that, but with bank accounts. Setting up literally different bank accounts, naming them specific names to say, this is profit, or this is what I'm paying myself, this is to pay the expenses and to grow the business. It's like giving those dollars a name and knowing a dollar comes in, this is where I put it to make sure we can keep the business going, that I'm healthy, that I can know if something bad happens, that I'm going to be able to have yellow lights instead of red lights, and being able to have those processes in place. So those are a couple of the things that we implement, and what I even saw as honestly an opportunity to help people like in that space be able to be like, okay, you don't know where the money's going, you're having trouble here. Well, you're going to have to get educated. Like you said, a lot of what we deal with is like even psychology. of like, how do you feel about money? How did your parents talk to you about money? You know, like, do you have some of these things that we actually have to work through? Like, you don't think you deserve it? You don't think that you're worthy of it? Or is it the flip side? You can get anything you want at any time because it's within arm's reach, and then you just always go for it. So it's like just being able to play that game as well, too, with them to make sure, okay, we have to maybe work on some other things too, in addition to just giving you a good system that'll help you with the finances of the business.
A really interesting point. Alex and I have spoken several times on the show where, you know, both of our parents, by chance, our mothers are doctors, our fathers are engineers. And so the idea was like, just like get a good profession, you know, you'll always have a job, you always have a good salary, and that's it. There was not really the concept of like investing when I was growing up. But I wanted to ask, so we spoke about successful businesses. So beyond the accounting and all of that, I completely agree that, you know, everything should be accounted for. But maybe we can talk about like what makes a business successful. So how do you capture profit? Because like, you know, we went to a really good business school where they basically teach you the efficient markets hypothesis, which basically, if that's correct, you should never be able to outperform the stock market, because like information is available to everybody and everybody knows everything. We know that the real world is not like that. And so we know that people make a lot of money, you know, doing different things. So what have you seen as, what makes a business very profitable and very successful beyond like the accounting part?
Oh, man. Well, I'm going to say number one, yeah, I'm a very simple person. So on the bottom shelf here, I would say it's what we talked about. Like, what is success for you? Like, I don't even like that word. You know, like, it's like, okay, you say what's successful. Do you want me to answer success as in what most people think of success, of like having lots of money, and that it's
I would like to
the
hear
business
your
is
perspective.
not dying and it's thriving?
Yeah.
Well, then if you're having me define it, it's what I talked about. One of the big mistakes that a lot of entrepreneurs make, not just real estate investors, but just a lot of business owners, that you start the business, but then you get the shiny object of what success is, but you're using other people's definition. You need to define what success is for you first. If success to you means that you work a certain amount of hours and you still have time for your family and you still go on vacations and you still do the things that you want to do, all the while having a business that actually runs and helps people and does the things that you want it to do, that might be success for you. But what about if you're single, you don't have a family? Is it just making as much as humanly possible and being able to give it back, or to be able to just buy all the toys you want? It's like, what is it that you want out of life? Because we've got a lot of people we work with, they set up a giving account. Their purpose is to be able to give money and to be able to give. Like, we've got one guy who gives to like a camp for kids. One guy actually funds orphanages in different countries. It's like their definition of success is, okay, the business is viable, sustainable, profitable, but then we're using a portion of that profits for the owner's higher purpose. Like, for them, they think that, hey, I want to use this profit to be able to do something that matters to me. So I think that's where a lot of people get trapped up. They think that success is this nebulous thing that has to be far off, versus, no, what does success look like for us today while we're starting this business, while we're in year one, year two? It might not be that you're making $1 million a month net, like in year 1, 2, 3, or 4, or 5. It could be that, hey, we made this much and we gave this much. We did what we could at this point. But we also were able to pay ourselves. We are also able to pay our people. We are also able to help the whatever product or service it is that we provide, able to help the people there too. So I think success, if you had to boil it down to, is number one, defining it for you and your business. And then number two, building the business around that. Making that North Star for your business. Like, no, I know I need at least $10,000 every month to sustain my personal expenses. So I need to get to that number as soon as possible, or my wife or husband or like significant other is going to be hounding me every single day. So it's like defining that for yourself and then aggressively attacking that. Then I know you said not the accounting and finance side, but then putting a system in place to be able that makes you focus on it. Because if you're going to go out there and put your name on the line and go out there, make the sales and make it rain and make the money flow in, have a system to catch it that lines up with what your definition of success is. So that way you can fulfill your purpose.
Alex, we don't talk about this enough, I think, on the podcast, which is like, success is not just money. Like both you and I have met so many people that are making a lot of money and are miserable. And so I love the idea that giving to orphanages should be like your definition of success. I really like that.
My definition of success, for example, is when I can swim like Scrooge McDuck in a pool full of golden coins, spitting them out of my mouth.
I do love Scrooge
McDuck. Yeah. Just dive in with the little, what were the nephews? The
Huey,
the red,
Dewey, and
green,
Louie.
blue ones.
Yeah.
Yes. There we go. I love it. Huey, Dewey, and Louie.
Yeah, for sure.
No, but this is a great, jokes aside, this is a great point. And I think it takes, it's hard. It's, I'm a fairly competitive person. It's hard for me to step back and, when then our show, Shimon does a good job of this, of pulling me back and saying, hey, let's look at this from a different angle. We both have a roof over our heads. We both are not starving. We both have healthy kids. And so that, intentionality, that the change in perspective, I think helps. And oftentimes, we're in our day-to-day grind and things come up and some things annoy you and some things don't. And it's easy to look, especially with Facebook and social media. Oh, look at the vacation these guys are having, and they're traveling in a private plane, but that might not be for you. And coming up to this area of Zen where you're okay with who you are is important. It's hard. And by the way, I'm preaching this and I'm not there, to be fully fair, right? To be kind of open and on air. I'm not there. It's hard. It's really, really hard to do.
It is. But then once you reach that place, it's a lot easier to feel successful as well. I was literally on a call with a guy 2 weeks ago, and he had the best year of his life so far. This guy's 25 years old, just did $500,000 in like 2022, and felt like a failure. Even though he even made $300K net. He made $300K net too. And he's like,
at 25.
At 25. And like this was his first full official year in business. The year before that, he did like $160,000 in real estate as like part-time. Then he did $500,000 when it was his full-time, but felt unsuccessful because he went to a mastermind event where a lot of other successful people were, and they were doing like $1 million, $2 million a year. And he felt inferior. And I'm like, my God, like if you would just wake up and ask a random 25-year-old on the street what they did last year, it's like not just money-wise, but just being able to do what he did as well, too, to travel, to be able to do all the things that 2022 made up for him. I'm like, man, we got to really work on this first, because you can accept that you were successful for 2022, but I can say that, but you have to accept it. So it's like that's where we see a lot of people in this space.
Go for
it. I was going to say just one quick thing, Shimon. Shimon and I used to work at the Boston Consulting Group, and it's a management consulting company. And we had this offsite between one of the years, of this leadership offsite, and we had they brought in the Stanford professor to come talk, and he looked like this dude from The Big Lebowski.
Nice.
We're all like, this is like one of the most prestigious, arguably like the best management consulting company in the world, and they get all these high power people that are everyone is like A-type personality, and this guy rolls in like sandals and like a long beard, and he's like, yeah, bro, it's totally California dude. And he said something very interesting. I mean, he asked us he just said, hey, show of hands of who thinks honestly they are performing less than average. By definition, it should be half of the people, right? Mm-hmm. In the room. I think out of the 40 people, 37 of us raised our hands.
Wow.
And we're like, we're performing less than average.
Yeah.
And it's, and you can see like that. There's no braggadocio here, but it's just in a high power organization where if you take most of those people in the room and you compare them against, especially the American public, all of them are in the top X percent of their classes,
Right.
In that room, most by far, and like not even the most, not like 60%. We're talking about 95% of the people said we are performing below average, and that visual was just very stark, right?
Yeah, about powerful.
how you get caught in a rat race and this FOMO about being better. Shimon,
No,
I'm sorry, I cut you off.
I wanted to change
what
the topic, but I think this is really important. The whole psychology aspect is important. So I wanted to ask David, what do you think are the most exciting things happening in the world of real estate investing right now? Like, again, after all the changes that we've seen this year, and maybe even outside of real estate, but what's like really exciting to you about these days in terms of investing, in terms of technology? What anything's on the table?
I feel like there's a couple people that I follow on Facebook that are using the GPT and some other services as well too. Like they're taking it to another level of like how they're incorporating it inside of their business. So I think that's exciting to me because I'm like, I see the possibility there, the potential also just for like my daughter's school and stuff. It's like, I'm excited about where that's heading. And that's where one of the things. Another was I've got a good friend. Actually, he's now a client of ours as well. But he sold. I think he was either the first or second to sell a house on the blockchain or something. Like he was able to actually sell real estate, through the blockchain or something like that. It was, and I might be saying it wrong, but like he used that type of service and system to be able to sell. Hit one of his houses. And I was like, oh, that's really cool. And because I think they still went through a title company and everything, but like the process for him was a little bit, like it was more streamlined in what they needed to get to closing. But then since it was the first one, it just was like a couple more hurdles since it was one of the very first deals to ever go this direction. But I thought that was pretty neat as far as the real estate world, just some of the outside of the box things that I get to see as what we're doing. I think another thing for the real estate investing world in general is just that I think now we're coming up on another time that's probably going to be a good time for opportunities to come up where a lot of people in the real estate space for the past probably 5 years, you could have jumped into real estate and made money because if you bought a house and in like 2020 and 2021 probably then sold it that same year or the next year, you were probably able to get more than you got, that year, even if you bought it wrong and didn't have all the formulas and it weren't a business, where now it's going to be the ones that are true business owners that are really going to be the ones that, take the next few years and being able to build the systems and create an even better, more streamlined process for that. I was just on another event as well last week where a lot of people that do creative financing in real estate, and that's a whole nother road of like, the seller, the seller sells it to you, but it's on like they're the bank. The seller holds the note for you, holds the mortgage, and then you're paying the seller, and they're basically just like a bank. A lot of them have not felt a lot of the dips and stuff because they're making up their own terms. They're making up their own mortgages and own notes and like that type of stuff too. So I see that in the real estate world as another viable option of like, this is going to work in any type of environment. So that's just another one where they're still going strong and being able to see those type of people as well too. So there's just some random things that I've seen in the real estate world. And then some of the ones where I see that are successful and keep being successful, they get the mailbox money as well too. Cause like they bought it on terms, then they turned around and sold it on terms as well too. So it's like one is paying the other mortgage down and then this one's another mortgage. So now it's that actual person's house versus being a rental. So it's just lots of creative things that you can do in real estate, especially during a market downturn that a lot of people might not think is available to them. But honestly, anyone can go out there and do some of these strategies. And I don't even have a course to pitch you, of like the different strategies and things to do. But I've seen so many people do it successfully that I know real estate will always be that viable option. So I'm excited about the real estate market. Interest rates up or down, it's really where can you take real estate and what can you do, especially in your market too? Because like I was saying, some markets are still, you put the house on the market, the next day it sells. There are some though that the house goes on the market now and it is sitting for 2, 3 weeks, 4 weeks, a month, 2 months, 3 months, where before it wasn't sitting for that long. So you have to be able to look at that and say, okay, is this just this property or is this now where my market is with, real estate? So being able to actually do that as well too. So there's a couple things cool in the real estate world and then just some observations as well too.
I love it. So David, we have a few minutes left. How can people find you? Can you tell us a
Alex,
little bit more about your podcast?
I can't hear Alex. Can you hear Alex?
Get in touch.
I wondered if it was
good
me.
for to be off mute to be able to tell you these things. With only a few minutes left, David, how can people find you, learn more about real estate, tune into your podcast?
Yeah. One-stop shop at simplecfo.com. Simple CFO, like Simple Chief Financial Officer.com. That's where you can find the Profit First REI podcast if you're interested in real estate or how to make sure you're actually keeping the money that you make in real estate and not having it all go out the door. And then I also wrote a book, Profit First for Real Estate Investing, which is the system to keep more money. If you're a real estate investor or interested in it, give you a good financial foundation. Probably weren't taught in school a lot of this stuff. That's just like, here's Finance 101 to make sure you're not losing more than you're making. And then if you want to set up a call with us, like I said, that's more if you're in the just entrepreneur space as a business owner. You've got a business, you want to grow and scale, but you want to make sure that you're doing it profitably and that you've got someone there that you can lean on for the financial side so you don't have to worry about the bookkeeping, the CPA, the taxes side, and you've got an advocate there on your team. That's simplecfo.com. You can schedule a call and see if we're a good fit. So that's a one-stop shop.
I think you guys will be a good fit. But yeah, please, folks, reach out to David and tune into his podcast. We actually did a guest appearance there. A phenomenal conversation. Love that we talked about psychology here and tips and tricks and mistakes that you should not make if you're investing in real estate. And then obviously subscribe, send us feedback.